What's up, team? Happy Sunday. I thought it would be a phenomenal time to break down the strategy, break down a trade that we took on November 5th. I want to break down the criteria we look for each and every single day. I want to break down the process. I want to break down what it is to have a consistent, repeatable, effective, and simple approach. We got our boy Todd, Louisiana's finest. I know my boy's always ready to put in this work on these charts and become a better trader, right? There's tons of traders out there, but what sort of trader are you? Are you the type of trader that is consistently putting in work, constantly diving into his journal, figuring out what works, what doesn't, figuring out better ways to approach the market in a more simplistic fashion, right? So that's our goal for today. We're going to break down the edge, and we're going to break down a trade that we took, and we're going to prepare, right, for the week coming ahead, right? So first things first, I'm going to whip out TOS. Let me share my screen over here. There we go. Bam. Now I'm going to, bear with me. I got new monitors now. Hopefully everybody could see this and it looks pretty easy to look at, right? So I want to break down November 5th, right? So November 5th was a very unique day, right? The way we were looking at it in the Discord was, we were looking, so we approach every single day the exact same, right? We approach the day in a bullish and bearish scenario, right? And the goal of this is to keep ourselves from becoming biased, right? We never want to become biased. We always want to stay objective, right? Now, the reason why this is so important, and if, I'm going to give you guys a little gem right here. This book changed my life, right? This is this is A Disciplined Trader by Mark Douglas. And then there's also this book right here, right? These books right here, these two books completely changed my life, right? So for any trader that's struggling, you should buy this book. You should study it. This should become your way of life, right? Dives very deep into beliefs, remaining objective, how to become profitable, but how to approach the market in a way where you're not predicting, right? Where no trade is special, right? You can ask me, you can ask any of the veteran traders on HPT. It's so important that every day we approach it where it's not special, right? It has to be systematic, right? We have to have a very similar approach every single day. Otherwise, our approach is skewed, right? If one day I'm looking to trade, moving averages, and then the next day I completely dismiss that approach, and then I use market structure only, right? Or I don't have solid entry criteria that's repeatable. This is going to cripple me, right? I'm going to constantly be behind the curve trying to predict things, right? So we need a very systematic approach, right? So this is our approach. This is how we trade every single day, right? So over here on the 1 hour time frame, you guys are going to see, I'll move it over here because you can't see because my YouTube face is right there. But all right, so over here on this chart here on the left here, I'll just do this. This will work. This chart on the left, we have the 1 hour, right? So every day we have to approach it in that systematic fashion, right? And what we're trying to do is figure out if it's what does it need to look like for us to determine buyers have the ball or sellers have the ball, right? So let's bring it back to remaining objective, right? It's up to us. It's our job to not predict things. So how do we do that, right? Well, you have to have tools, right? If you're building a house, if you're trying to assemble anything, or if you're trying to build a consistent approach, you need to have tools, right? You need these tools that you can rely on every single day, right? And one of these tools that I use is the moving averages, right? So we have the 50 EMA, we have price action, we have market structure, right? So now I'm looking at this 1 hour time frame and I'm painting two scenarios in my mind. The first scenario is going to be a bearish one. Why? Well, because we're below the 50, right? The EMA cloud is red, right? These are some of my tools and they're telling me, right, that the market is somewhat bearish. So I'm going to be watching to see how price reacts to this 50 EMA, right? This is very important. If we could get above this 50 EMA, I'll be starting to become more bullish. But until I'm above that 50, I have to remain bearish. And this is the essence of our strategy. This is why I love moving averages so much, because they paint the picture, right? It completely distinguishes all urges of predicting. I don't have to predict anything. Instead, I'm watching to see who controls that moving average, and then I'm going to trade with whoever's holding the moving average. So it's very important during the pre-market plan for me to go, okay, in a bearish scenario, price is going to rally into that 50 EMA, and if selling shows up, we'll be able to see it off open print, right? So we're going to be looking for whoever controls the open, right? That's going to be a signal for us to either go long or go short, right? This is why I love critical levels so much, right? That is the previous day high, low, open, and close, right? This is our pint numbers, right? Our critical levels. These levels hold all the volume, right? So this is how I approach the market. If sellers hold it, we'll see it, right? We'll see it off open print. We'll see it off the 50 EMA on the 5 minute, on the 1 hour, and then we'll make a move down to end of day, and then we'll target previous day low, right? So that's our bearish scenario. In a bullish scenario, buyers are going to step up and show strength, right? So let's hit play over here on demand, and let's see how this day plays out. And I remember this day very vividly, right? So what I'm going to do is I'm going to load up my SPY contracts, right? So you can see right here off the rip, we started to get a lot of buying, right? Now, once again, I'm referencing the 1 hour. We're below that 50. I do not want to long just because I have a green candle at the open. It's very important that everyone hears me say that, right? We don't just long because we're getting green candles, right? We need structure, right? We need signals. We need healthy trends, right? We need a little bit more, right? So we allow price to do its thing. You can see here, the 50 is actually acting almost like a price magnet, right? We're getting a lot of buying here at the open. So we're going to let it do its thing. And it's very important, right? It's, okay, now watch, right? We're starting to rip into that 50 EMA. Now there's a couple things I'm noticing here. We're also ripping past pre-market high, right? That is a sign of strength, right? So we can label this. This will be pre-market high, right? We'll draw a little zone there. So now looking at price, right? Now I'm going to whip out the 5 minute as well. And now I'm going to start playing that bullish scenario in my mind, right? What do I need to see to actually get in this trade, right? And where are my upside targets, right? Well, if I go back to that 1 hour time frame, I'm going to go, all right, if then, right? It's always if then. We have this upside target of 57440, right? It's way up there. You guys see it? You see where I'm getting it, right? I'm getting it from a previous low, right? That's a pit number, right? So we have previous day high. We have previous day high, which is all the way up here, but that's pretty far away, right? So I want to stay realistic, and I want to be aware of the levels I should target, right? So if buyers hold previous day high, I'll then target 57440, right? That'll be my next upside target. Okay, cool. So now let me whip this back into the 5 minute, because we've gotten our HPT cross, right? So all the HPT followers, you guys know this is my setup. This is my strategy. Notice here, I'm not chasing these buyers either, right? Because there's nowhere for me to put my stop loss, right? There's no logical place for me to stop out of the trade, right? I need a little bit more, right? So this is where your patience has to come in. Watching the 2 minute, we're approaching previous day high. Obviously, I got my eye on an open print retest if we get it, but it's starting to get a little far away. So now I'm going to whip back to that 1 hour. I want to show you guys something. Look at the 1 hour 50. We're now above it. This is a sign of strength, right? This is a sign that sellers couldn't defend it, right? Sellers couldn't hold that 1 hour 50, right? So now, once again, I'm using my moving average and going, okay, based on how price just reacted off this level, things are getting more bullish. But I still have no entry criteria, right? None whatsoever. So there's nowhere for me to get in this trade. And we're coming up to previous day high, right? So once again, I'm looking to identify acceptance, right? Let me get this right so we can see it and it looks pretty. All right, we're going to do it like this. This is perfect. We have previous day high. We have 574.40, right? We're coming up into PDH. It's the first 5-minute candle here. Let me see if I can speed it up. So now, once again, right? Number one, critical level, right? That's our first area. That's our first step to the process. We've identified 2 critical levels. We have end of day. We have previous day high, right? Number 2 is I need a healthy moving average to price ratio. I don't want extensions. This right here is an extension, right? Notice here, we're getting very far away from the 9D EMA on the 5-minute. I do not want to long that, right? Because 9 times out of 10, price is going to consolidate back to the moving average, or it's going to sit stagnant and allow price or allow the moving average to suck back up, right? So I want to be patient here, right? And you can see price is starting to come back down into that moving average, right? So I never long anything if I'm far away from the moving average, right? Because it doesn't make sense, right? Why would I want to enter a position if price is very far away from the moving average? So now I'm watching here. We get a very nice red bar that's ignored, but I don't want to long it. Why? Because the relationship between price and the moving average, right? It's just too far away from me, but I do have my eye on long entries, right? So let's see what happens. We're coming up into previous day high. So this is the very important part, right? If I can get buying acceptance here, I'm going to look for a long entry. I want to see sellers lose, right? I want to see sellers show up here. I want to see them try, and I want to see them lose. If they can lose, I'll then enter the market long with appropriate risk, targeting 574.40. And it takes a lot of acceptance here. It takes a lot of patience, right? You have to be okay with missing the trade, right? It's very important. Watching the 5-minute here, we're a little extended here from the 9. I'm looking for price to pull back into it. You guys see the little pocket, right? You guys see the pocket here on the 5-minute? This little pocket, I do not see. There we go. Price is going to come back down into this. It's going to close that pocket. It's very important that you guys learn this principle. This principle changed my life. It works on all time frames. It works on the 5, works on the 2, works on the 1 hour, right? So you guys want to be aware. You want to be very cognizant of what that looks like. All right, we're getting a red bar. If I could get this red bar to get ignored, I will then enter the market long, because that will be a sign of strength for me. I'm looking to see sellers lose, right? Until they lose, there's nothing for me to do, and there's nowhere for me to put my risk, right? So I need to see a red bar to get ignored at a critical level, right? I need that healthy relationship on the 5-minute, right? Let's whip that 5-minute back up. See how price came into the 9? Look at how buyers are respecting the 9D EMA, right? This is very important. You watch price come back into the 9, all right? And we just stay patient, right? See if we can get it. There we go. So once again, this is how we identify acceptance, right? Sellers are trying. I'm looking for them to lose. How do I tell they lose? I'm looking for this red bar to get completely and utterly ignored. My stop will go right below it. We're about 40 cents away from the bottom of this candle. Also, guys, notice this red bar that was ignored previously is holding, right? This is where I identify my zones, right? It's starting to look kind of pretty. See what happens. Sellers looking weak. Coming back down, tagging this zone, tagging this area. I like the relationship here on the 5-minute, right? Look at the 5-minute. You got the EMA cloud holding. You got the 9D EMA holding. You got the HPT cross indicator, right? This green arrow pointing up, signaling that the 5 and the 21 EMA have crossed, right? So that's just a very simple indicator for us to understand who's in control of the market. All right. So it looks like that red bar here is getting pretty much ignored. There it is. Bam. So this is where I then enter long into the market, and my stop loss is going to be below that red candle. And look at them buyers. This is how we identify acceptance, right? This is how you start to understand who's in control of the market, right? Now, once that happens there, I'm more focused on the 5-minute time frame. Every time I enter my trade, right, I go, okay, I flip to the 5-minute. I use the 2-minute to identify the entry. And then once I'm in the trade, I'm flipping to the 5-minute, and I'm going to go, all right, how does this trend look, right? Well, it's very healthy. Look at the moving average, right? There's no extensions. There was a little extension, but then it got sucked up. It got gobbled up, right? And then once sellers brought price back into the 9D EMA, notice how buyers defended it in the last 1 to 2 minutes of the candle, right? That's very nice. Now, notice here, previous day high. We're now above it, right? So now I'm looking for buyers to continue to hold this, right? I got my stop below that. I could probably bump my stop to below this guy just to really keep a very tight risk reward on this trade, right? And just like my boy Todd, his famous saying, I'm risking 1 bar to always make 2 bars, 3 bars, 4 bars, right? What does that mean? See, we went long and we put our stop below this bar. Now we're in a long play, and now we're looking to make 1 bar, 2 bar, 3 bars, all the way up to 5, 7, 4, 40. See, this is how you manage risk appropriately. It's a very simple way. Look at that. That looks very good. That looks beautiful right there. We took this trade live too on Discord. It was phenomenal. It felt very uncomfortable, but we were able to absolutely capitalize on it with using our 3-step process, right? Our very simple 3-step process, very simple approach, right? Where you just watch the market, you watch the critical level, and you watch the price and the moving averages, my friend. If you can take that from HPT, if you could learn to watch price, watch how it reacts in healthy trends and unhealthy trends, right? If you could get familiar with what a healthy trend looks like, you'll be able to stay in your trades longer, right? A lot of traders go, Josh, I can't hold trades long. Well, it's because you don't understand what a healthy trend is supposed to look like, right? If you did, it would be much easier for you to stay in the trade, right? I watch this and I go, there's no reason to get out of this trade. We're not extended, right? The moving average is here at 573.30. We're about 40 cents away from it, right? Until we get about 75 cents away from it and we're approaching a level of interest, I pretty much stay in the trade. And then look at that red bar right there that was ignored. That's beautiful. Look at that. Look at that. That's how we entered long on Friday too, right? It was the exact same setup. This was the exact same setup that we took Friday. Price rallied into all-time high. We got a red bar, ignored. We went long, stopped below it. Bingo. Done. Finito. Finished. Right? Watching that 2-minute here. Wow, these contracts soared over here. Look at this. What do we buy these for? Wow. Yeah, so we got long at $200 a contract. Yeah, we're up about 75%. SPX, I took this trade on SPX. It was over 100% ROI, right? Nothing crazy. Very simple. Look at this. Just rallying. Bam. Right in the target. Bing. Now that, my friend, would be a scale, right? That's where you then sell half your position, take the full position. It doesn't matter. The process is what matters, right? What matters is your repeatable approach, right? I highly suggest that you have some sort of exit plan, right? You need a way to distinguish, right, that, hey, I've hit my target. I got to lock profits in. Don't be greedy. Don't be the type of guy that needs to make more money. I don't care if you're trading one contract. Execute it properly, right? When you hit your take profit, always take something. Otherwise, you're not rewarding yourself for trading your edge properly, right? This was a really good trade. Really good trade. Price then rallied all the way up, right? So that was a really good, simple way to run through the strategy, right? Price rallies in a previous day high. How did we understand How were we able to distinguish buyers were in control? Using the moving average and using the RBI at the critical level, right? It was beautiful. It was flawless. You can see here, right? Price is still holding relatively well. The main reason I took profits at that level was the moving average on the 1 hour, right? Look at that pocket, right? Look at the pocket right there. We literally are, what is this? $2.50 away from our moving average on the 1 hour, right? So once again, anytime you're extended from a moving average, you can 9 times out of 10 bank on the fact that it's either going to consolidate or it's going to come back down, right? And you got to make the decision if you want to hold through that or not, right? Let's look on the 5 minute. We're coming back up. We're getting a little extended from that EMA cloud. That's where I would take the whole thing, right? I would definitely take that and lock that in and live to trade another day, right? So that was a really good one right there. This was it right here when we took it on SBX. What day was it? And something new I'm doing, guys, just so everybody knows, this day right here, right? Bam. Same exact criteria. Look, red bar, ignored, long, boom. 68% on that trade. Very simple trade, right? That was a very simple trade. We just went through it. What was the criteria? Critical level and the moving averages, right? The moving averages are your key, right? They are your key. They literally unlock the door to consistency. If you can learn to use moving averages properly, they will unlock the door to consistency. I'm telling you, because every single trade that you take that's not profitable, you're usually trading against trend. You're usually trading an unhealthy trend, right? Or if you're not taking profits, when you like, all my issues come from not utilizing the moving averages in the correct way, right? If you could learn to use them appropriately, you'll gain a massive edge in the market, right? So that was a really good one right there. Let's see. Let's go over, let's do one more, right? Let's do one more. Friday. Let's see here. What other ones? Yeah, let's do Friday. You know what? We'll do the day that we went live. All right. So what day was that? This day right here. November 9th. This is why on demand, guys, it works amazing. On demand is a game changer, right? Completely. 09. Let's see here. We'll go 33. Like, this is what I do all day. This is what I do all day. I literally just trade on demand and just solidify my edge over and over and over again. It's a very strong, good tool. All right, so here we go. So first thing I'm going to do, right, this is Friday. All right, check this out. That's what we're going to do. We're going to pause price, and we're going to label our pin numbers, right, because that's what we do every single day. Come here. This right here is PDH, right? This is previous day high. It's the highest price from the previous day. We have end of day right here. I like this right here. I like that a lot. I like seeing buyers hold end of day, right? It's very nice. Okay. And now we got open print. Okay, so let's get rid of this. So once again, the 3-step process, right? Number 1 is identify your critical levels, right? In front of us, we have end of day, we have previous day high, and we have open print, right? So OPs right there. We have previous day high, and this is EOD, right? So this is BAM, okay. All right, so now we can press play. Remember, we have no upside targets, right? So this trade was a little bit difficult. It's live on YouTube as well, right? So if anybody wants to watch this, you can watch it live on YouTube where we were managed this trade for over 4 hours, right? This was a 4-hour long trade. And this is the thing. When you get comfortable with your chart reading skills and your moving averages, right, that you can learn to do things like that, right? You could hold a trade for 4 hours. If nothing changes, there's really no reason not to, right? So let's whip out our 2 minute. All right, we got our 2M right here. Just like the trade before, we're looking for acceptance at previous day high for a possible long play. And if sellers hold it, we're looking for a possible short play. Right? So that right there was our edge, right? So once again, we're going to use the very simple strategy of the red bar ignored and the green bar ignored, right? So if you guys could see this chart here on the bottom, once again, right, we're getting a little extended from the 9. So I do not want to long this, right? So if I'm extended on the 5-minute, I don't care what I see on the 2-minute. I'm not doing anything because 9 times out of 10, price is going to come back to this blue line, or it's going to consolidate and allow the line to catch up. So I do not want to, I don't want that. If I'm longing and there's that gap there, that's what I call chasing, right? I never want to chase. Instead, I want price to come back into this or consolidate, and that's what I call healthy trend. It's very important that you always trade healthy trends. If you're not trading healthy trends, if you're I'll never forget when I figured this out, right? Because then I finally stopped chasing, right? It's very important. Okay, so look, price is coming back to it. Go figure. We got open print right here. I'm looking for a retest here. I remember we don't get it. And that's fine because we're still able to identify acceptance, right? We're still able to figure out that buyers are holding this. We're looking for that strength here coming up into previous day high. And I'm looking for a red bar to get ignored, right? That's key. It's very key. This is actually getting kind of close. I still don't like the relationship here between price and the 9, so I'm not longing. And notice here, we really can't beat that red bar. So this is where I remain patient. I whip out the 1 hour, right? This is where I use my 1 hour and it changes everything, right? I go, all right, 1 hour. What's your trend look like, right? Hold on, let me get this so you guys can see. You guys see the 1 hour, right? You guys see the blue line? You see how we're hugging it? We're not very extended from it, right? We're hugging it. And we closed below it on this candle, the previous candle, and now we're closing back above it. This is a very strong signal of buying pressure. Anytime I see something like this, where we close below the 9 and now we're closing above the 9, this is very bullish. But I look at the chart in front of me and I go, man, there's no bullish chart pattern. So I'm patient. Notice here, we're coming back into the 9 DEMA, right? We're coming back towards open print. Good. It's exactly what I'm looking for. I'm looking for buyers to show up here. I'm looking for them to violate sellers, right? And if I get it, I'll then enter the market long. I'm looking for this red bar here to get ignored on the 5-minute as well, right? So what I'll do is I'll go, all right, red bar, where's your high, where's your low? Then I'll be like, all right, buyers, you need to take this zone. If you take this zone, I will then trade with you, right? And my stop will go below the red bar. I'm also referencing the 5-minute time frame, and I'm going, all right, are we extended from the 9? No, price is hugging it. Good. What color's the EMA cloud? It's green. Good. Was there a crossover? Yes, right there. Good. Okay. Buyers just violated that red bar. So at this point, I'm in the market long, right? Oh, hold on. I got the wrong ones. Hold up. Everybody, this is the worst when this happens in your live. SPY. Bam. This is November 8th. Let's go here. All right. We're in it. Okay. We are in it to win it. All right. Now look at red bar completely ignored here on the 5-minute. What am I looking at here? I'm looking at the trend. I'm asking myself, is it healthy? I'm not really watching the 2-minute. Remember, once you enter into a trade, at that point, I flip right back to that 5-minute. I go, all right, is this trend healthy? How do I know? Is there any extensions? No, this is healthy trend, right? This is completely fine. I'm in this until price comes back below that red bar. It's that simple. Now I go, all right, what's my 1 hour look like? 1 hour looks beautiful. Beautiful. That's what we call the bull 180 right there, right? 1 hour completely. Sellers tried to take it right here, and then buyers completely 180'd the momentum, blowing out the top of that 1 hour. And look at the 9D EMA, right? This is you got to get very familiar with this. This is so important. If you guys only knew how often I reference the 1 hour time frame before entering and exiting positions because of that reason. Yeah, this is beautiful. So yeah, then we got in this long, and then it was pretty much a waiting game, right? We were like, okay, I like this. Price is good. It's holding. This is exactly what I want to do, right? And I want to just remain completely aware of what price is doing, right? All right, it completely violated this red bar. So now we got another red bar, right? Let's see what happens, right? Can buyers take this one as well, right? If so, I mean, that's really not a bad spot to add into the position. Keeping your stop loss below this red bar. Just playing the strength, right? Because remember, this is a critical level. This previous day high, right? So the price action we get here is going to be straight from the banks, right? Because these levels hold all of the volume. Really nice. I like seeing that EMA cloud open right up like that. That's beautiful. Look at that. Buyers just invalidated that red bar right there. Cool. That's a sign of strength. That's what we want to stay in. I'm going to fast forward here though, guys, because we'll be here all day. Right? So, okay, price rallied all the way up. So when we were trading this live, we took profits. I was trading 2 SPX contracts. I took profits right here on one of them because I hit 58% ROI. And then the last one, I kept my stop exactly where it was initially. And I remember on the live, I'm going, okay, we're coming into previous day high here. If buyers want this, they will defend it. If they don't, they will lose it. But I was completely calm because I was watching the 5-minute, and I'm like, as long as we don't break below this red candle, this 940 candle, this is still extremely bullish, right? Why and how do I come to that conclusion? The 1 hour time frame. Look at this. Even look at this price action on the 2-minute. I'm literally holding longs while this is happening because this. Look at that. On the 1 hour, this is extremely bullish. Why is it bullish? Look, we just broke above PDH. We closed above it. And prices respectfully coming back down to the 9D EMA. Of course it is. Look at how extended we were at one point. When we hit high of day, right, up here at 597.50, that 9D EMA was $1 away. Of course it had to come back down, right? And I was willing to hold that because how confident I am with the 1 hour time frame. I'm like, of course, like when you get that familiar with the moving averages and what happens most often, you'll go, okay, if for me to hold on to this trade, I need to be okay with a pullback to the 9D EMA, right? I have to, because it happens 9 out of 10 times. I can't be ignorant enough to assume that's not going to happen. So I have to play it accordingly, right? And for me, I was willing to hold on to this trade. We were live. A lot of traders were in this trade. And I was really trying to follow the process very strictly, right? So I didn't just want to book all my profits up here, which would have been fine. But I knew we were trading into all-time high, and I was looking to capitalize on a much longer move, right? I was really confident it was there. And, that happens. Look, my contracts are back at break even, and that's completely fine, right? We took profits up here. So now I'm in a stress-free trade, right? And I'm allowing this to play out, right? So now let me skip ahead. And look, she cannot close below PDH. It's insane. And now look at the 1 hour, right? Look at the 1 hour. Look at that beautiful relationship between price and the 9, right? Price literally came down and tagged it perfectly. How does this happen on the 5 minute, the 2 minute, the 1 hour, the 1 minute, the monthly chart, yearly chart? It does not matter which chart it is. This principle applies. And when applied properly, you can have an edge that prints. Like, just this knowledge of the 1 hour guides me like crazy. It's a very simple principle. It's just not many people are aware of it. I don't think people study the charts as much as maybe I do in that fashion. But it serves me extremely well, right? And hold on, I lost it. What the heck? Look at this. Just beautiful right there. Look at that. Healthy trend. We're coming into the highs. This was beautiful. This was beautiful. This was another slam dunk day. But we're going to wrap it up here on demand. And we're going to go into Sunday prep. So, guys, use on demand. It's extremely valuable, right? On demand is literally a tool I use every single day. It's like in the morning. I wake up extra early just to get a trade in on demand, right? Like Kobe Bryant said it best, right? You're not going to beat him to the gym, right? He's going to put in more reps than you. He's going to shoot more free throws than you. He's going to do more than you. Like, the one that practices over and over and over again is the one that's going to feel the most confident. It's the one that's going to have, the best understanding. He's going to learn more things, right? If you put the work in, it's funny how when you apply effort, when you sacrifice time, you learn more, right? It's just a universal principle, right? So just put the work in. Don't be the trader that just thinks he's going to get better, right? It's not going to happen. Put the work in. All right, so let's make this much bigger here. Okay. All right, so Sunday prep. What am I looking at, right? I'm sure a lot of you guys are subscribed to my newsletter. If not, click the links below, subscribe, and you'll get recaps every other week on the market conditions, right? But let's dive into it here. Let me just get rid of some of these lines. Click. All right. So there's two ways to look at current market conditions, right? A lot of people, I know, I'm just going to speak on what I used to do and what I do now, right? So a lot of times in my past, I would be like, dude, the market's rallying. It has to reverse, right? And then I would approach the market in a completely biased, heuristic fashion, meaning I was married to one side, right? Not based on market conditions, not based on the moving average, not based on anything, right? I would just assume because the market's rallying that it has to reverse, right? And that is not the right way to trade because you'll go into Monday shorting a setup like this, right? You'll be like, oh, pre-market high rejection. I'm going to go short because I'm predicting that the market's rally so high, sellers got to come in. And then what happens? Bam. You get smoked, right? So do not, and I repeat, do not go into the market tomorrow assuming just because it's rallying that it's got a pullback, right? Because 9 times out of 10, the market's going to follow trend. We're in a very bullish market right now. So please do not assume sellers are going to come in. Instead, be like this. If sellers do come in, what will it look like, right? That's the question you want to ask yourself. So what I do is I whip out the daily time frame and I draw some pit numbers. And I go, okay, there's a couple things I'm noticing here, right? 9D EMA, price, massive pocket, right? We are very extended. Now remember, just like we were just talking about in the on-demand, right? I do not long or short. I don't enter a trade if I'm this extended from the 9. That's the principle I use on the 5-minute time frame, right? So how can we use that principle going into tomorrow on the daily time frame, right? Because the principle doesn't matter what time frame. It works on the 1 minute, 2 minute, 5 minute, 10 minute, 15 minute, 1 hour. Daily, right? They all work on the same, right? It's the same principle that applies on all time frames. So how can we use that principle to make a better, more informed, logical, rational decision in the market, right? Well, let me show you. So I'm going to be like this. A bullish scenario, right, is I'm going to be looking for buyers to defend previous day low, right? End of day, which is up here, right? So basically, I got my pint numbers, previous day low, end of day, and PDH. And then if sellers can come in and hold previous day low, I'll then start looking to target 59208, 9D EMA. And then in a bearish scenario, I definitely see this level being a price magnet, right? Definitely. Why? Well, it was previous all-time high, right? So you know there's mega volume up there. So yes, in a bearish scenario, I will be looking for shorts down to 59208 and 5863, right? But in a bullish scenario, I'm going to be looking for buyers to step up at this level, right? And then looking to target end of day 59972 and above, right? So use the moving averages on the daily to give you a better understanding. Hey, 9 times out of 10, price needs to either consolidate back to the moving average, right? Pocket's got to get filled, or price needs to consolidate and move sideways and allow the moving average to catch up. And when that happens, price turns into massive chop, right? So just be aware, right? Be aware of what that'll look like and how you can trade it best. But I will be watching previous day low extensively for clues. So that's SPY. Let's do Qs. Look at that chart, man. That's beautiful. That chart is beautiful. Look at the 50. Look at the 50 EMA right here. That's insane. Look at that. Price rallies into it, hits like a wall, hits like a wall, hits like a wall, pops. Notice here, look at the gap here that was filled to the upside. I love when this happens. Anytime you get a mega gap, right? Look at that. Beautiful. Price gaps down, sells into the 50, gaps up, rallies. 50 EMA is a critical tool. Works on the daily time frame, 1 hour, all time frames. It doesn't matter, right? And it's so funny, right? Because I talk to a lot of traders, and they'll be like, "Oh, Josh, I don't like the 50. I like the 13. I like the 21. I like this. Listen, it doesn't matter which EMA you use. What matters is you're familiar with how it works. That is the beauty of trading. It does not matter. You can use I don't care what EMA you use. Just use it appropriately, right? So when I worked at JMA Wireless, right, and I worked in the lab, I collected data all day. We studied 5G antennas, and what we would do is we would test them, right? So you test 5G antennas with radio frequency, right? You test PIM, you test return loss, right? Those are two forms of measurement, right? Very simple. Now, the radio frequency industry could get extremely complicated if you allow it to. Or, like my mentor always told me, you ask yourself, when you're looking at data, you go, everyone always goes, oh, is it failing? Is it bad? Right? How can you tell? And it's not specific, right? Like, oh, if it's below negative 100 dBc, it's failing, right? No, is it familiar? Is anything irregular, right? Or is that how it usually looks? That is how you approach the moving averages. That's how you approach the market, because nothing is as binary as good or bad, right? You can't be that naive or ignorant to think that things can be either good or bad in the market. You have to ask yourself, are they familiar? Is the trend healthy? Is it unhealthy, right? That's just a very simple way for me of going, oh, that trend, that's familiar, right? When the 5-minute holds and the 9 DEMA holds and we don't have extensions, look, no extensions. When we did get extended right here, we got a pullback. So that would be a good spot to take profit, right? You take profit right there, and then you go, all right, I would allow price to come back down to the 9. This right here is healthy, right? What's unhealthy look like? Here's another healthy trend, right? We're hugging. This right here, unhealthy. Look, extended right here. Extended right here, right? We don't want to trade a trend like that. We want healthiness. It's so crazy. Oh, this is great. Extremely unhealthy. We want nothing to do with this, right? So once again, if I was looking to go short here, I would be like, I don't like it. Why? Well, number one, look at how extended we were. So like, put it this way. If I'm looking to go long right here, there's no way I will. Why? Because we are $2 away from the 9 DEMA. The data tells me that the price is going to either consolidate, which means be choppy, or reverse anytime you're far from a moving average. So why would I ever want to long the market if I'm $2 away from a moving average? I'm telling you guys, if you can understand this principle, you will stop chasing stupid trades. It's so crazy, right? And I laugh because it took me 3.5 years of trading like garbage to finally realize this. And how did I realize it? Through going through the data, right? Going through the data. And I was lucky to have worked in an environment where I studied data all day and looked for trends, looked for patterns, look for irregularities, right? And ask myself, why is this irregular? And how can I avoid those going forward, right? So, my man, that's my rant. But all what I'm saying is get familiar with what healthy looks like and unhealthy. And then it becomes easy not to chase, right? If you're aware of that principle, you're not going to chase tomorrow, right? Why would you chase? It doesn't make sense 90% of the time. That means out of 10 trades, 9 of them will fail if you're far away from the moving average, right? But that concept also applies if you're looking to play reversals. Think about it. If price is rallying into previous all-time high and you're extremely extended from the 9 DEMA, I'm not a big reversal trader, but if you are, that's what we call the snapback, baby. Anytime you're extended from the 9, price snaps back into it. I utilize that principle extensively on the 1-hour time frame, right? So quick little example, like right here, right? Look at this. This is actually a really good one. You got previous day low right here, right? That's a pint number. So we're obviously watching to see how price reacts to it. Now, most traders would be like, oh, this is extremely bearish. I'm looking for shorts, right? But HPT members will be like, oh, my bad. You guys can't see. HPT members will be like, hold on. How can I do this? Here. Right. Ready? Like this. Let me see. All right. And then I'm going to go like this. All right. Now you can see, right? So and tons of traders will be like, oh, this is very bearish. We just broke the lows. Look at how solid that candlestick is, right? It's got to keep selling off. But HPT members would be like, I can't short that. Why? Well, price is literally $2 away from the 9. And the principle tells me, Josh is always screaming it, right? That the 9 DMA price is going to snap back to it 9 out of 10 times, right? So there's no way in hell I'm shorting this. I don't care what the chart pattern looks like on the 5, 2 minute, doesn't matter. I cannot short that because I know I've studied the data that 9 times out of 10, price is going to return back to that 9. So instead, I would be like, okay, what do I need to see for a long play? And look at what price did. It literally ripped back up above PDH, our previous day low, and rallied back up into open print. What day is this? 10/16? It's crazy. Let's see what that looked like on the 5 minute. I'm just curious. And then we'll finish up here. Day was that 10. Right here. Look at that. Look at this. So if you had that knowledge of the 1 hour, right, and you were looking for a short play right here, you'd be like, oh, I can't short it. The 1 hour tells me no, right? And this is a pretty healthy trend. Look, we're not that extended from it, right? So I would understand why someone might short this when price broke the lows. But because that 1 hour, I would be like, absolutely not. I'm going to stay patient. And I'm going to look for sellers to lose here, right? And then once this red bar gets ignored, boop, that's a good long play back up into open print. It's not really my type of tea, but even if it keeps you from taking a bad trade, it's worth it, right? So let's go back to the daily here on Qs. Beautiful chart, man. Beautiful chart right here. Hold up. Beautiful chart right here. Look at this. Break above previous all-time high. Look at that. That's so damn bullish. Look at that. I don't trade Qs that often anymore. I'm pretty strict on just trading SPY and SPX. But I still chart Qs for all of my members. There's still a pre-market plan every single morning for SPY and QQQ. Because I know a lot of my traders are future traders and they don't discriminate, right? They smack NQ, they smack ES. A lot of my options traders as well, they trade QQQ, right? I love QQQ. QQQ is great. I traded QQQ for a very long time. I just found my best. I do best financially while trading SPX. I've gotten very familiar with how much I like to risk and how much I like to make, right? So SPX just tends to work for me. But I don't discriminate against QQQ. And also, it's a tool, just like everything else, that helps us make better decisions, right? So we're ripped above previous all-time high. In a bearish scenario, guys, this is definitely a price magnet. Why? Because the market communicates to us through market structure. The market can't speak verbally, but it can graphically. And we see that through market structure. Look at that. That's beautiful. Once again, I'm looking any selling below previous day low. I'll look for short plays back into the 9, possibly back into previous day low, and then obviously filling the gap, and then back to previous all-time high, right? And then if buyers defend this level right here, right? Maybe they defend this level, maybe they defend this altogether. I'm then looking long, targeting the abyss, right? So I'm really excited, guys. I'm very proud of the team. I'm very excited. The team is leveling up. We got team members on HPT that are sending me their charts. They're sending me their consistent months. I'm so proud of them. They're keeping their losses extremely tight. It's so crazy. It's a recurring thing. Traders join HPT and they're like, oh, I keep blowing accounts. I'm struggling here. I'm struggling there. And then they start to see everyone on the team and they see the camaraderie, right? They see how everybody shows up, how no one's calling out dumb trades. No one's chasing. Everyone's very strict. They're disciplined. They're very calm. They hold trades, right? Like the whole team is becoming extremely strong, right? And that was the goal of high performance trader, right? The goal was to build a platform for traders to come and not just become consistent, but to become the best versions of themselves, right? So once again, if you want to join, click the links below. We're really starting to level up. We got a very nice, good group. I'm very proud of all you guys, right? You guys are putting in the work. It's starting to show, right? So once again, guys, I love you. Thank you for spending your time with me on this Sunday. I'm looking forward to this week. And also in the near future, I'm probably going to start doing, live trades, maybe on YouTube every once in a while. So obviously keep a lookout for that. That'll be kind of cool. I want to try it out. But until the next time, guys, stay blessed. Journal your trades. Become better. Join the team. I love you. Let's kill it this week.